seasonal tokens is the first crypto designed to make cyclical trading profitable. And the founder is with me, Ruan, to explain exactly what that means. So welcome, and let's just start, Ruan, explain seasonal token. What is it?
Okay, so a token is a cryptocurrency that doesn't have its own blockchain. And these tokens are designed to have seasonality in their prices. And the reason for that is that investors can profit from seasonality. So seasonality is something investors can use whenever they find it in prices. So there are investors who are looking among the stocks and commodities of the world to try to find seasonality in their prices. They want to find a clean, strong seasonal signal in the prices of stocks, commodities, or any assets, because as long as there's any seasonality in those prices, then it's possible for the investors to use that for investment and make a profit from it. So what we can do with cryptocurrencies, specifically with proof of work mining, is we can create cryptocurrencies that have strong seasonality in their prices, especially with respect to each other. So in this case, we've got 4 tokens, spring, summer, autumn, and winter, and their prices are designed to cycle around each other slowly over the course of years. And investors can use that seasonality the same way they would use seasonality in stocks or commodity prices.
Okay, well, that is very interesting because I grew up on a farm, so I kind of understand, especially in commodities, everything, energy, food. So that's really interesting. So now done properly, it should build upon a trader's investment over time.
Absolutely. Yep.
Okay, definitely. Explain how that would work.
Okay, so the prices, they slowly cycle around each other. Initially, winter was the most expensive price and spring was the cheapest. So it was possible for traders to trade winter for spring and increase the total number of tokens that they own. And then over time, spring will become the most expensive price. And then it will be possible to trade spring for summer, which is then the cheapest. So once every 9 months, the rate of production of the fastest token, the token which is produced at the fastest rate, gets cut in half, and then it's produced at the slowest rate. So spring was initially the cheapest because it was being produced at the fastest rate, and now summer is being produced at the fastest rate, and 9 months from now, autumn will be produced at the fastest rate, and then winter, and then spring again. So whichever token is the cheapest will depend on time, and the prices will cycle around each other slowly over the course of years. So somebody who starts off with 100 winter tokens could change them into maybe 150 spring tokens, and then into 200 summer tokens, and then into maybe 250 autumn tokens, and then they can continue to do this. And then once you go through a complete cycle, you'll have more tokens than you started with. So you could trade the tokens in a cycle, and then the total number of tokens in the investment will keep increasing. So as long as an investor follows the rule of always trade tokens for more tokens of a different type, then the total number of tokens in the investment increases with every trade and never decreases. So it's possible to eliminate the risk of making a trading loss measured in tokens just by always following that rule.
Oh my goodness, how interesting. There's really some heavy duty math involved in this too. I'm seeing.
Yeah, it took a lot of analysis to get it right.
Why seasonal tokens then versus something like Bitcoin?
Okay, so if you have Bitcoins and you want to trade them and get more Bitcoins over time, you need to gamble in the sense that you need to sell the Bitcoins when you think the price is going to go down, and then buy more Bitcoins when they're cheaper. But if you do that, then you're risking a loss because the price might go the wrong way, and you could end up with fewer Bitcoins than you started with. So if you have seasonal tokens, you can just follow the rule, always trade tokens for more tokens, and then that guarantees that the total number of tokens will increase. So with Bitcoin, you need to gamble if you want to get more, but with seasonal tokens, you don't. You can do it in a way that eliminates the risk of ending up with less. Okay,
that's what I'm seeing here. It takes away some of the volatility. Is that correct?
Absolutely, yeah. From your investment, it takes away the downside volatility. There's a measure called the Sortino ratio, which measures how well an investment has performed, and it looks at what's the risk of the measure of your investment going down, and it's possible to completely eliminate that, and so you only have upwards movements in the number of tokens in the investment.
Very interesting. So what can be done with the seasonal tokens that has not been able to be done with crypto before?
So I think the most important thing is that it makes it possible for the investors to help the miners and to earn a share of the economic value that's produced by the miners. So, for example, when the rate of production of spring was cut in half, then the cost of producing spring tokens doubled instantly, but the price didn't double. And that means that it became unprofitable to mine spring. But what happens after that is that investors trade other tokens for Spring because they know the Spring token price is going to rise in comparison to the others over time. And by trading other tokens for Spring, they push up the price of Spring, and that makes it profitable to mine Spring again. And that helps the miners, so that by shifting their capital from token to token as the mining costs change, the investors are able to help the miners to mine more efficiently. And by doing that, they earn a fraction of the new tokens that are produced. And that comes from the real economic value of the work done by the miners.
What should investors know about tokenomics? And explain the concept of tokenomics, and then how investors can know about the credibility of that.
Absolutely. So basically, it's about counting the tokens and being able to understand how their market prices are going to change over time, especially in comparison to each other. So in this case, we have tokens. We have 4 tokens, and they have 4 prices, and each of them has a dollar price. But the dollar price is something that's very difficult to control. It depends on interest rates, the economy, the state of the crypto market, and so on. But the number of winter tokens that a summer token is worth, for example, that doesn't depend on anything outside the system. It only really depends on time. So it's possible for an investor to make trades that are essentially just bets that time will pass. And they're going to win those bets, and that means that you can have certainty, and that's how you're able to eliminate the risk of ending up with fewer tokens than you started with, because you're not betting on geopolitics or the state of the market. You're just betting that time will pass and these tokens will go through their cycles.
Interesting. And then, what is the current status of the seasonal tokens project?
So at the moment, in June, there was the first halving. Once every 9 months, the rate of production of one of the tokens gets cut in half. And that happened in June to the Spring token. So before June of this year, Spring was the cheapest token, and all of the prices of the tokens were stable with respect to each other. They were basically reflecting their rates of production. But what's happened now is that the rate of production of Spring has been cut in half, and the number of Spring tokens in the world is becoming scarcer in comparison to the other tokens, because fewer Spring tokens are now produced than any of the other tokens every day. And the result of that is that the price of Spring has started to rise, and now summer is the cheapest token. So in terms of credibility, what investors can do is they can look at the historical price charts, and they can see that the prices are intended to cycle around each other. And the first upswing of the first of those cycles has just started, and it'll be possible as the months go on for investors to watch the charts, see the prices cycle around each other, and see that tokenomics actually works.
And where can I watch seasonal tokens? Can I buy them on a crypto exchange?
Yeah, they're on 2 centralized crypto exchanges at the moment. They're on coinsbit.io and coinstore.com. You can also buy them from Uniswap on Polygon or on the Ethereum network. And if somebody wants to see the token prices relative to each other, they can go to our website at seasonaltokens.org and click on charts at the top. It will show them the theoretical price chart that shows the smooth oscillations, but real market prices are, of course, volatile, and it's going to be jerky, and it's not going to be completely smooth and continuous oscillation. Instead, there's going to be some unpredictability, as there is in the market. But you can watch the prices basically by going to our website and clicking on charts at the top.
Okay, all right. Thank you so much, Ron, for explaining that. It's a very unique concept in the cryptocurrency industry.
Thank you for having me.
Thank you.